Folks, the market doesn't ring a bell when something big is about to happen. It doesn't send you a telegram and say, "Here comes a breakout, get ready." No, it just sits there quiet, acting like nothing's going on. But if you've been watching long enough, you start to notice the little signs. That's what separates the players from the suckers. The real money, the kind that makes fortunes, comes not from guessing or gambling, but from catching those moments when the tide is about to change and riding it for all it's worth. Tell me, have you ever seen a stock move and thought to yourself, "Why didn't I see it earlier?" That's the game we're talking about right now, spotting those breakouts before the crowd wakes up. Let me tell you something, and I want you to remember it. The market is always testing you. It's always whispering lies to shake you out or lure you in too late. But beneath that noise, it leaves tracks, footprints, little hints of what's coming. If you're patient, and if you learn how to read those hints, you can spot a stock before it takes off. And once it does, the crowd rushes in, but by then it's already too late for them. The cream's been skimmed by the fellow who saw it first. Now, don't you want to be that fellow? I've sat in enough bucket shops and brokerage offices to know one thing: most men want action, not profit. They want to trade every wiggle, every tick. They're chasing shadows. But breakouts aren't about shadows. They're about waiting, watching, and then striking when the conditions line up. Think about it. Would you rather be in 100 trades with nickels and dimes, or in one trade that pays you dollars over and over? Which man ends up with the bigger bankroll? Here's the truth about breakouts. They don't just happen out of nowhere. Before a stock can lift off, it usually goes through a period of resting, building, coiling up like a spring. You'll see it in the tape, in the chart if you're that way inclined. The price moves within a range, not going much higher, not going much lower. The amateurs get bored. They sell out. The professionals, they're watching. They know something's being built under the surface. Have you ever seen a stock just sit there quiet for weeks, then all of a sudden, bang, it shoots up 5 points in a day? That's no accident. That's a breakout. And the signs were there all along if you knew where to look. The market is a crowd, and crowds act the same way time after time. They get excited together, they get scared together, and they get tired together. A breakout is nothing more than the moment when the crowd suddenly wakes up to what the tape has been whispering for days or weeks. But by then, if you're sharp, you're already in. You're not chasing, you're waiting for them to come in and pay you for your foresight. Isn't that the better way to play the game? Now let's talk about the trap most fall into. A stock nudges up a little, and the fellow says, "That's the breakout." He jumps in, and then the stock drifts back, even lower than before. He sells in disgust. The next day, the real move begins without him. Why does this happen? Because he was too impatient. He mistook a feint for the real thing. You see, the market loves to trick you. It shows its hand, then pulls it back just to shake out the weak hands. The real breakout is the one that comes with power, with conviction, with volume behind it. A stock doesn't break out quietly. It announces itself if you've got the ears to listen. Do you see what I'm saying? I remember times when I'd sit and watch a stock for weeks. Nothing exciting, just quiet trading. But I'd notice the dips weren't going very low. Every time it sagged, it bounced back quickly. Somebody was supporting it. The supply was being absorbed. That's a sign. That tells you someone big is buying quietly, patiently, getting set for the move. And when the line is clear, when the resistance is finally eaten up, the stock explodes. That's your breakout. How many of you have been shaken out too soon just because you couldn't stand the waiting? Be honest now. Patience, my friends, is the most valuable thing in this business. More than tips, more than charts, more than opinions. Waiting for the right moment. Most men can't wait. They've got to be in the action, even if it's the wrong action. They get itchy fingers. But the smart player knows that money is made not by constant trading, but by sitting tight when the odds are in your favor. The breakout is the reward for patience. You've been waiting through the dullness. through the boredom, and then suddenly you're rewarded with a move that pays for all that waiting. Doesn't that sound like the better deal? And here's something else to think about. A real breakout doesn't just give you a point or two. It often starts a whole new trend. And a trend, once started, can run farther than you ever imagined. Men underestimate trends. They think a stock is high, so they sell too soon. But in reality, a strong breakout can carry a stock much higher than the public thinks possible. That's the sweet spot. That's where the big profits are. Have you ever sold too early and then watched the stock double after you were out? Hurts, doesn't it? The trick, then, is not just spotting the breakout, but knowing when it's real and when it's just noise. The tape tells you. The volume tells you. The action tells you. The stronger the push, the clearer the signal. But above all, you must train your eye to see the difference between a weak move and a strong one. A strong move won't hesitate much. It breaks through resistance and keeps climbing. The weak ones falter. They hesitate. They slip back. Do you see why most men fail? They can't tell the difference, or they don't want to wait to find out. I've said it before, and I'll say it again: the market is never wrong, but men often are. The tape tells the truth, but men don't want to believe it. They argue with it. They want to outsmart it. But the breakout doesn't lie. When a stock wants to go, it goes. Your job isn't to argue. Your job is to recognize it and get on board. Have you ever noticed how your worst trades come from fighting the tape instead of following it? You see, one of the market's favorite tricks is the false move. It loves to fool you. It will give you just enough to make you believe something big is about to happen, then turn right around and smack you in the face. If you've been around long enough, you know what I mean. A stock looks like it's about to run, it pokes its head above resistance, and you think, that's it, here we go. You buy in, feeling smart, only to watch the stock sink back like a stone. The next day you're nursing a loss, scratching your head, and telling yourself the game is rigged. Tell me, have you ever been caught in that kind of trap? I'll bet you have. Most traders have. The market doesn't hand out money for free. It tests you, teases you, and shakes you out before it rewards you. A false breakout is nothing more than the market's way of asking, are you serious, or are you just another impatient gambler? And most men fail that test. They jump in too soon, or they lack the discipline to wait for confirmation. They want to be the first to the party, but they end up being the fool that sets the table for the real move later. Doesn't that sting? Now, here's the real difference between a false move and a true breakout. A false move is timid. It's hesitant. It pushes a little higher, just enough to trigger stops and lure in eager buyers, but there's no power behind it, no conviction. It doesn't have the strength to keep going. Think of it like a boxer throwing a weak jab just to test his opponent, not to land the knockout punch. The true breakout, on the other hand, comes with force. It doesn't just poke its head out, it charges through resistance and doesn't look back. It runs because real money is behind it, not just weak hands chasing a tick. Can you see the difference? When I used to sit watching the tape, I learned to notice the character of a move. A stock would rise above its range, but the tape looked lazy, the volume thin. That told me it was a false move, just a feint, and sure enough it would drift back into its old range, leaving the eager fellows holding the bag. Other times, when the real breakout arrived, you couldn't miss it. The tape came alive. Orders rushed in. The stock jumped through resistance and didn't pause for breath. That's when I knew the real players were stepping up, the professionals with deep pockets. And when they make their move, they don't play games. Don't you want to be with them instead of chasing shadows? Think about the psychology for a moment. The crowd wants to get in early. They fear missing out. The market knows this, so it throws out a fake signal, lets the amateurs rush in, then reverses and takes their money. Once those weak hands are shaken out, the stock is free to move without resistance. That's when the true breakout begins. The smart money waits for this. They let the crowd exhaust itself, then they step in and push the stock with real force. Haven't you ever noticed how the strongest moves often come right after most people have given up? The test for you, as a trader, is patience. You don't want to be the man jumping at every shadow, chasing every tick. You want to be the man who waits for the move that doesn't hesitate. When the breakout is real, you won't have to squint or wonder. It will be obvious in the way the stock behaves. It'll run clean through resistance, not stumble over it. The tape will be busy. The volume will swell, and the price won't retreat easily. A strong move doesn't give you much chance to second guess. It keeps climbing, leaving the doubters behind. Do you see why waiting is more profitable than guessing? I remember watching certain stocks that would creep up day after day, barely moving. Then one morning, out of nowhere, they'd gap up and trade like wild, as if someone had lit a fire under them. That's a real breakout. It's sudden, it's decisive, and it leaves no time for hesitation. If you'd been tricked by the false moves earlier, chances are you weren't ready for this one. You'd been burned, so you hesitated, and the stock took off without you. That's the irony. The false move not only takes your money, it also robs you of your confidence, so when the real move comes, you're too scared to act. Have you ever felt that sting of missing the big one right after losing on the fake one? That's the market teaching you a hard lesson. The trouble is, most traders don't learn the lesson. They keep falling for the same trap. They don't slow down to study the nature of the move. They don't ask, is this real strength or just a head fake? They only see what they want to see. They see a price nudge above resistance and call it a breakout because they're desperate for action. That desperation is what the market feeds on. The patient man, the disciplined trader, he waits. He watches. He looks for the move that doesn't hesitate, and when he sees it, he acts with confidence, because he knows the difference. Wouldn't you rather be that man? Let's dig deeper. When a stock breaks out with hesitation, you'll often notice it stalls quickly. It creeps above the old high, but then it just sits there, struggling, as if it's out of breath. The volume doesn't support it. Buyers aren't rushing in. That's a warning. That's the market telling you it's a false move. But when the breakout is real, it's like a dam bursting. The price surges, volume pours in, and the stock doesn't waste time fiddling around. It has purpose, direction, and energy. That's the power you want to see. Have you trained your eye to notice that difference? Another trick is to watch how the stock behaves after it breaks out. In a false move, the price often slips back into the old range within a day or two. That tells you the breakout didn't have the strength to hold. In a true breakout, even if the stock pulls back a little, it doesn't go all the way back. It finds support at the new higher level and then continues up. That's a healthy sign. The market tested the breakout, found it strong, and moved forward. Do you notice how the strong stocks act differently than the weak ones? Here's something else I've learned: these strong hands don't waste time. When they decide to push a stock, they push it with authority. They're not timid. They've built their position quietly during the base, and when the time is right, they launch the move with conviction. Weak hands, on the other hand, can't do that. They chase, they hesitate, they scatter when the move doesn't go their way. That's why the breakout backed by strong hands looks and feels so different. The market reveals its strength if you're willing to watch carefully. Do you see how this all ties together? Most men want a formula, a mechanical rule to follow. They want someone to tell them, buy when the stock moves 1 point above resistance. But the market doesn't work that way. A formula can't tell you the conviction behind the move. You have to develop the feel, the judgment, the instinct that comes from watching the tape, studying the action, learning how the market behaves. It's like a poker game. You don't just look at the cards, you study the players. The breakout is the market showing its hand, but you need to know if it's bluffing or if it's all in. Haven't you ever been fooled because you followed a rule blindly instead of reading the action? The truth is, you don't need to catch every move. You only need to catch the right moves. The false breakouts, the hesitant feints, they're not worth your time or your money. Let them go. Focus on the moves that don't hesitate, the ones that have strength and volume behind them. Those are the moves that pay. And remember, You don't need 100 trades to get rich. You need a few big ones. The real breakout is your chance at one of those big ones. Isn't that a better way to think about trading? The danger is in the temptation. Every time a stock nudges above resistance, it calls to you, whispers, "This is it. Don't miss out." That's the siren song of the market. If you're weak, you follow it, and it leads you to ruin. If you're strong, you hold back, you wait for confirmation, you demand proof. And when the real breakout comes, you don't need to be told. You'll see it, you'll feel it. It won't hesitate. It'll run, and you'll be ready. Isn't that the game we're really trying to master? You know, the market is always giving you little clues if you care enough to watch. It's like a man walking through wet sand. He can't help but leave footprints behind. The footprints I always paid attention to were the ones left after a dip. Most folks get nervous when a stock dips. They say, there it goes, the move is over. But me, I always asked, how far down does it go before it finds buyers? That's the real story. And if every dip is stopping higher than the last one, that's telling you something important. It's telling you strong hands are quietly supporting the stock. Have you ever noticed that pattern before, or do you only look at the highs? Think about it like a ladder. Every rung you climb higher gives you a new floor. If the market keeps giving you higher floors every time it slips, it's building a staircase upward. That's the action of strong hands. Somebody with size, somebody with patience, is picking up all the stock on the way down. They're not letting it collapse. They're absorbing supply. That's not amateurs playing around. That's professionals setting the stage for the next leg up. And if you're sharp, you'll see it. You'll know the game before the big move starts. Isn't it better to spot that than to be surprised later? Most traders are so fixated on the highs that they miss the real message in the lows. They chase breakouts over the top, but they ignore the quiet work being done underneath. If a stock falls to 50 bounces, then later dips to 51 and bounces, then 52 and bounces again, that's a trail of evidence. The floor is rising. Buyers are showing up sooner each time. That's no accident. That's strength. But most men are too impatient to notice. They see a dip and panic, or they sell out thinking they're saving themselves from a loss. Meanwhile, the strong hands are smiling, scooping up those shares on the cheap. Have you ever sold out too soon, only to watch the stock run without you? I learned long ago to respect the actions of the big money. They can't hide what they're doing. They leave traces in the way a stock behaves. A weak stock breaks down badly on dips, there's no one there to catch it. But a strong stock, backed by serious money, refuses to go down very far. Every time it sags, it snaps back like a rubber band. That's the strong hands showing you their presence. They may not announce themselves, but you can see their shadow in the tape. Doesn't that make you wonder who's behind the curtain? The psychology here is important. The public sees the dip and gets scared. They sell. The professionals see the dip and step in. They're confident because they know the story. They know the stock's worth. They know what they've been building toward. And every time they buy up those dips, they're tightening the spring. The weaker players are being shaken out, and the stronger hands are taking control. That's why the lows keep rising. It's the passing of the stock from nervous holders to confident ones. Have you ever thought of the market as nothing more than a transfer of shares from the weak to the strong? Now, here's the beauty of higher lows. They don't just show strength, they also set the stage for a breakout. Think about it, if sellers can't push the stock as low as before, it means supply is drying up. At the same time, demand is quietly building. Sooner or later, that balance tips, and the stock has no choice but to break higher. That's how powerful moves are born. Not out of nowhere, not by magic, but out of this slow, steady process of rising support. Do you see why watching the dips can be more revealing than chasing the highs? I'll give you an example. Years back, I watched a stock trade in a range for weeks. Every time it fell back, it refused to go as low as before. 40 became the floor, then 41, then 42. I said to myself, somebody's propping this up. I didn't need to know who or why. The tape was telling me all I needed to know. And sure enough, When the pressure built up enough, the stock broke through resistance like a cannonball. It wasn't luck. It was the footprints of strong hands that gave it away. Haven't you seen a move like that before and only understood it afterward? Another thing to notice is the speed of the rebounds. In a weak market, dips last. The stock drifts lower and stays there because nobody wants it. But when strong hands are in control, the dips are short-lived. The stock barely has time to sag before it's picked up again. That's not retail buying. That's someone with size making sure it doesn't get away from them. If you see that kind of action, quick rebounds, higher floors, you can bet something's cooking. Don't you want to be on the side of the ones doing the cooking, not the ones being cooked? The crowd always underestimates what's happening. They say, "Oh, it's just noise." But the quiet rise in support levels is one of the clearest signals you can get. It means there's an invisible hand under the stock, holding it up, guiding it higher. And when that hand is ready, it will push the stock into a full breakout. The amateurs will rush in then, but by that time the easy money has already been made. The smart trader saw the higher lows and got positioned early. Isn't that the better place to be? Of course, it's not always easy. Sometimes the market fakes you out. A stock might look like it's making higher lows, only to collapse suddenly. That's why you don't act on one or two dips. You look for a pattern, a series, a real trail of evidence. The more times the stock sets a higher floor, the stronger the case becomes. One bounce doesn't prove much, but 3, 4, 5 in a row, that's a different story. That's accumulation. That's strong hands at work. Can you see why patience pays better than rushing in on the first sign? And don't forget to pay attention to volume. Rising support with increasing volume tells you buyers are stepping up with conviction. Rising support on thin volume might not mean much, it could just be lack of sellers. But when you see heavy buying every time the stock dips, that's your clue. Somebody's serious. Somebody's building a position, and they're not doing it for a point or two. They're planning for a bigger move. Doesn't that make you want to sit up and watch closely? I've always said the market is like a great big auction. The price goes to the level where buyers and sellers agree. If buyers are willing to step up at higher and higher levels, it means demand is outweighing supply. It's as simple as that. And when demand is stronger than supply, prices have no choice but to rise. The rising support is the proof of that imbalance. It's the strongest clue you'll get before the breakout. Isn't it funny how simple the truth is, yet how few actually listen to it? The average man only learns this lesson after losing. He sells in fear on a dip, only to see the stock rebound higher. He sells again on the next dip, and again the stock rebounds. After a while, he's out, disgusted, thinking he's escaped a loser. Meanwhile, the stock has been quietly passing into stronger hands. Then one day it breaks out and runs, and he says, "I knew it!" But knowing it after the fact doesn't put money in your pocket. Recognizing it while it's happening does. Haven't you kicked yourself for being that fellow? So when you watch the market, don't just look at the highs. Study the lows. Ask yourself, where does this stock stop falling? And then ask, is it stopping higher each time? If it is, you're seeing the hand of strength. You're seeing the signs of control. And that, more than any tip or rumor or headline, will tell you what's coming next. If there's one thing I learned in my years of trading, it's this: the crowd always comes in late. They don't see what's happening until it's already plain as day, and by then most of the profit has already been taken by the ones who got in early. That's the simple truth of this game. The difference between a fortune and a frustration is whether you're in before the crowd or after them. Tell me, do you want to be the fellow paying top dollar after everyone else has piled in, or do you want to be the man who's already sitting comfortably when they come rushing to buy from you? Now, spotting strength before the crowd sees it isn't magic. It's not about having a secret tip or some inside information. It's about learning to read the action of the stock before it becomes obvious. A strong stock will show its hand early if you're paying attention. It'll trade differently than a weak one. It'll refuse to stay down on dips. It'll creep upward when the rest of the market is flat. It'll show volume at odd times, like somebody's quietly buying. These are the tells, the whispers, the little signs that strength is building beneath the surface. Have you ever seen a stock behave like that, and only later realized what it was trying to tell you? The crowd waits for headlines, for stories, for confirmation from the newspapers or from their brokers. But by the time the news hits the street, the real money's already in. Professionals don't wait for the papers. They act on the tape, on the price and the volume, on what the market itself is saying. That's how they're early. They see the strength before the crowd notices, and they're positioned when the breakout comes. Isn't that where you want to be? I can remember countless times when I'd sit in the brokerage house, watching the tape. A stock would act firm, not spectacular, just firm. Every dip was bought up quickly, every rally was steady, not wild. Nobody was talking about it yet. The crowd had their eyes on the flashy stocks making noise that day. But I knew better. I knew that steady, quiet strength was worth more than all the noise in the world. And sure enough, weeks later, the crowd would finally catch on, and the stock would explode higher. But by then, I was already in, sitting pretty, watching them scramble. Have you ever wished you could be that man instead of the one chasing late? The trick is to develop patience and a sharp eye. Early entry doesn't mean you guess. It doesn't mean you buy blindly hoping something will happen. That's what gamblers do, and gamblers go broke. Early entry means you see the signs of strength before they're obvious. You notice the rising lows. You notice the sudden surges in volume when no news is out. You notice the way the stock shrugs off weakness when the market wobbles. That's strength. That's the market tipping its hand. And if you're alert, you can step in before the crowd sees it. Doesn't that sound like the edge you've been looking for? Most men think they want to be early, but they don't have the nerve to do it. They wait until the move is so obvious they can't deny it. By then, it's too late. They've missed the cream. They're buying into a move that's already stretched. And then, when the inevitable pullback comes, they're shaken out, discouraged, swearing that the market is unfair. But the truth is, they weren't early, they were late. They didn't trust their own eyes. They waited for the crowd's approval, and by the time they got it, the profit was already gone. Haven't you done that before? Waited too long, only to regret it? The courage to act before the crowd comes from one thing: experience. You can't fake it. You've got to sit and watch and learn how a strong stock behaves. You've got to take the time to study the tape, to notice the difference between weak action and strong action. And once you've trained your eye, you'll start to see it. The stock will be telling you, plain as day, that it's under accumulation, that somebody big is building a position. And when you see that, you don't need anyone else to tell you what's happening. You know it yourself. Isn't that the kind of independence every trader wants? I used to watch the crowd and marvel at how they always arrived late to the party. They'd get excited after the move was halfway done. They'd buy on the front page of the papers when the news was already out, and then they'd wonder why they never made any real money. The professionals, meanwhile, were already in, already set. The profit came not from being smarter, but from being earlier. That's the game in a nutshell. Be early, or be one of the many left fighting for scraps. Which side do you want to be on? Now, don't mistake early entry for blind guessing. A lot of men fool themselves this way. They think they're early when they're really just gambling. They buy without evidence, without signs, just because they hope. That's not early entry, that's suicide. True early entry is based on signs of strength, rising support, heavy volume on up days, quick recoveries from dips, resilience when the market turns sour. Those are the footprints of strong hands. You don't need to know their names or their reasons. All you need to know is that they're there, and they're not playing for pennies. Isn't that enough for you to follow along? It's also about discipline. Being early means you buy when things are still quiet, when there's no applause, when the crowd thinks you're wasting your time. That's hard for most men. They want confirmation, they want agreement, they want others to nod and say, Yes, that's a good trade. But the market doesn't reward comfort, it rewards foresight. And foresight means acting before the crowd, not with them. So when you're early, you're alone. You've got to have the stomach to sit there and wait, knowing that the crowd will come later and push the stock higher for you. Do you have that kind of stomach, or do you need the crowd to hold your hand? Here's the irony: being early often feels wrong. It feels uncomfortable. You're buying when nobody else cares. You're sitting in a quiet stock when everyone else is chasing the hot name of the day. You feel like you're missing out. But if the signs are there, if the strength is showing itself, you're not missing out at all. You're positioning yourself for the real move while the others are wasting their bullets. And when the breakout finally comes, you won't be chasing, you'll already be there, ready to ride. Isn't that the smarter way to play it? I'll tell you something else. Early entry isn't about catching the exact bottom. You don't need to. You just need to be in before the crowd wakes up. If you're waiting for perfection, you'll miss it. The point is not to guess the lowest tick, but to recognize strength as it builds. That's enough.